Market opinion before we wind up. We spoke to N Jayakumar, Group CEO and MD and Prime Securities, after the market town hall earlier this week to get his views on the market and the way forward. I started by asking him about sectors that he likes and he believes are under-owned. Let's listen in.
A couple of sectors actually. One, clearly pharmaceutical, and some of the triggers here being under-owned space, low on index weightage, balance sheets are outstandingly good. PLI in that space is creating more opportunities, and the entire generics picture in the US. Pricing is still stable, and US shortages of drugs continues. So if you take a combination of this and the fact that this is an undervalued, under-owned space, I would love to continue investing in pharmaceutical despite the overall markets being at lofty levels.
Okay, all right. So pharma is one theme that you like from here on. The other one, Jakes, that I'm looking at is something that you have been very, very passionate about, and you believe that this cycle in metals is here to stay.
Sure.
Everyone's talking about it's a periodical move. You have been telling me for years now that, Nigel, this is here to stay, and Indian metal companies are very, very well placed. You have rate cuts as well that we're looking forward to in the Fed. How are you feeling about it right now? And what's the preference at current reckoning between ferrous and non-ferrous?
I wouldn't necessarily differentiate between the two because mining and mineral capacities are difficult to recreate, number one. Number two, in the context of consolidation everywhere in the world, people have been selling off their coal assets, selling off other assets. Existing companies are becoming stronger. Number three, deleverage balance sheets. So go for balance sheets that are able to take on more debt in terms of capacity expansion. Number four, most of the companies are now increasing capacities on an organic basis with internal accruals. And number five, cost cuts. All these make, to my mind, along with the tailwinds of a cut in interest rates overseas, I personally believe this sector could surprise us. In fact, many of the stocks are quoting at lifetime highs, but I think it's, if you take EV/EBITDA multiples, they are still middling to high single-digit multiples compared to the rest of the market, if you will. And to my mind, some of these like consolidation and cost cuts make these very exciting even going forward. Stable, solid returns rather than spiky doublers, etc. But solid returns coming from the spaces can't be ruled out.
Okay, all right. Okay, all right.